2 years ago, Broadcom had essentially no AI business, roughly 2 billion in custom chip revenue, mostly for legacy customers. Today, they're the second largest AI semi company on earth, behind only NVIDIA. $50 billion AI revenue run rate per their Q2 earnings call. Nobody on Wall Street saw this coming. Watch until the end. I'll show you the single quarterly metric that will tell you whether this AI dominance lasts and why most investors will look at the wrong number. Broadcom's AI revenue trajectory per their public earnings. Fiscal 2024, roughly 2 billion in custom AI chip revenue. Fiscal 2025, 12 billion. Fiscal 2026 current run rate over 50 billion. That is 25 times growth in 24 months. To put that in context, NVIDIA's data center revenue grew about 6 times over the same period. Broadcom went from a rounding error in AI to the second biggest player. The growth rate is faster than NVIDIA's was in the original AI boom of 2023. Here's who's actually buying. Google buys custom TPU chips designed by Broadcom for their internal AI workloads. Meta buys custom MTIA chips for their recommendation models. ByteDance reportedly joined as a third major customer in 2026. Each customer commits to multi-year volume agreements measured in billions. The structure is different from NVIDIA's spot market sales. Broadcom designs the silicon to the customer's specific architecture. Then they collect ongoing royalties per chip shipped. It is a more locked-in business model than NVIDIA's. Once a hyperscaler commits to a Broadcom custom design, switching costs are enormous. To understand how this happened, you need to understand Hock. He is Broadcom's CEO. He took over the predecessor company Avago in 2006. Most retail investors have never heard him speak. He almost never gives interviews. He has spent 20 years building one of the most disciplined acquirers in technology, buying chip and software companies, cutting costs, then milking cash flows. The VMware acquisition in 2023 was vintage Hock. He paid 61 billion. Then he fired half the workforce. Free cash flow doubled within a year. He is famously not a visionary. He is operational, and that pattern is exactly how the AI business got built. Here's the part most analysts miss. Broadcom's AI business carries roughly 75% gross margin per company disclosures. That is higher than NVIDIA's blended margin. Why? Because once a hyperscaler integrates a custom Broadcom chip into their data center architecture, they cannot easily switch suppliers. Their entire software stack is built around the chip. NVIDIA sells general purpose GPUs that customers can swap for AMD or in-house alternatives. Broadcom sells lock-in. The moat is structural. The customer concentration risk is real, but the pricing power is significant. This is the part of the business that very few analysts have correctly modeled. Here's the signal I promised you. Most investors look at Broadcom's AI revenue growth. That's the obvious metric. The metric that actually matters, the percentage of AI revenue from top 3 customers, currently estimated at over 70%. If that concentration drops to 40 or 50% in coming quarters, it means new customers are joining and the moat is widening. If it stays above 70%, Broadcom is one Google decision away from a revenue cliff. The Q3 earnings in September will be the first read on this. Watch the customer concentration disclosure. That is the metric that defines whether this AI business is a durable franchise or a temporary windfall. September 4th, 2026. That is Broadcom's Q3 earnings call. The customer concentration disclosure is the number that defines whether this AI business compounds for a decade or evaporates at the next chip cycle. Subscribe to tickr for the breakdown when the number drops. Next week, we are walking through Tesla's 7 broken robotaxi promises and the pattern that connects them.